This Twin Peaks Investing podcast is brought to you in association with SharePad from Sharescope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.
Hello and welcome to the Twin Peaks Investing podcast. My name is Peter Higgins and you can find me at Conkers3 on Twitter. This is an unusual Conkers3 introduction to the Twin Peaks podcast because we are without Wheelie Dealer today. For the first time, it's the first podcast we're going to be doing without Wheelie Dealer. Because of extenuating circumstances, he's going into hospital and we've been having to record this at short notice. But we have a special guest, possibly an understudy, because I know how good he is, of Henry Viola Hare with us on the Twin Peaks podcast today. And you can find Henry on Twitter at HTViola. And he is a friend of mine, so I'm not going to be gentle with him. You know, that's just the way I am. And we're going to have a chat about stock shares and the market. But first, I wanted to say hello to Henry and Henry to just give an introduction to you ladies and gents who have been following us for some time now. Hello, Henry. How are you, mate?
Hi, Peter. I am really well, thank you. Thank you very much for having me on the show. It's a little bit like getting to meet a hero of mine.
That's very kind of you, Henry. But the only heroes I see, mate, are in the NHS and in the armed forces and elsewhere. Oh, wow. The professionals, the professional heroes, mate. I'm just
the real life savers.
Yeah, the real life heroes. I'm just an amateur, mate. I'll just do my thing, and I know Wheelie would have loved to have been here with you as well, to give you some questions as well. But I want to start really, if I may, with regards to your background, and then we're going to talk about the market a bit later on. I'm conscious that we need to squeeze this in and get this wrapped up very quickly. So background-wise, what do you do currently now? And when and why did you get into investing?
So I've been investing for about 10 years, mainly my own funds. And it was to try and beat the savings rates you could get at the bank. I started investing at about the time of the great financial crash, 2008, 2009. And really was just disappointed with the way that bank accounts were giving me a return on my money. And I started looking into the stock market as a way to just get a better return initially. And I've got a couple of relatives that are in and around financial services and use financial planners. And they said, well, if you're interested in investing, then you should meet our advisors. So I went along and met a few of these people and was by and large quite unimpressed with them. They could sell me funds with a label, you know, here, buy this BlackRock thing, buy this Vanguard thing. And when I'd asked them what was in the BlackRock thing or the Vanguard thing, they had no idea.
Dear.
So that really put me off. I was like, you know, why would I give my money to these people? I could do better myself, I'm sure, even if I only know what's in the funds. So I started investing my own money. And I've been investing for about 10 years now. I've done about 11% a year since then. On average, which I think is reasonable.
That's very good, actually.
Had some really volatile years. You know, last year was my best ever year. I did 23%, I think. Some years I barely scraped single digits. So it's definitely not for the faint-hearted, but it's something I've got a real passion for, which is why I enjoy your podcast so much.
Mm. I think the word you've touched on there is passion. And I think that gives you the energy, because I know you work full-time, you've got quite a big and important job. And, you know, you're always busy and you've always got deadlines and all the rest of it. But not only do you fit the full-time job in, but you do your blogs and your articles, and then you're researching these stocks and funds and so on and so forth. So in order to do that, it is about passion, because people are going,
you have to,
you know what?
You have to,
because I have conversations with people all the time saying, I'm just too tired to do all the research you do, Pete. I'm just too tired. I want to go to the pub. I want to spend time with family. And cramming that family in, plus doing your passions is hard work.
Yeah. It's a matter of priorities. You know, I was listening to another very good podcast from a guy called Mike Boyd yesterday, called the Business of Family.
Okay, all right. Okay, it's not what I'm aware of. Okay, I'll check it out.
It's all about family offices, so managing dynastic wealth, that sort of thing, and family-run businesses. And they got a chap on there that was talking about setting up time for his family. And he said, if you don't treat your family as a business, you don't make them a priority, you will lose them. Family is a very fragile glass ball, and if you drop it, it's gone.
Yeah, and as you know, I've got friends of mine that run legal firms, and a lot of the divorces that they're dealing with is just going up and up and up and up. And I don't think lockdown helped when some people were at home more often than they were actually wanted to be at home.
It drives my wife mental having me in the house.
Well, hopefully, that will recede as you spend more time back at work. Hopefully, going forward. Now, I wanted to talk about a little bit your investing style, because you've created, obviously, you're a bit like me. You're a DIY investor. You're trying to do things yourself, and through the umpteen years that you've been investing, you've navigated it and you've created your own style from learning, mistakes, successes, and so on and so forth. So tell us a little bit about your style.
Well, I tend to describe myself as a value investor. So I'm looking for opportunities where I perceive I can get more for my money, essentially. You talk a lot about buying pound coins for 50 pence. I think that's a really good way of summarising it. I've got about 60% of my portfolio in UK shares. So I actively pick individual companies that I like, that I think are undervalued, and that I'm going to be able to sell for more money in the future. I've got about maybe 10-15% of my money in speculative growth stocks as well. So when I first started investing, I was very much a Warren Buffett, Ben Graham value investor, buy cigar butts, buy cheap and loved companies. But I found that over time, quite a lot of them were failing. They weren't growing their revenues, their profit margins were declining and flaky, and they weren't giving me the share price returns that I was looking for. So I started to look at what Cathie Wood calls investing in the future. So this is around not paying so much attention to what went on the last 10 years and trying to figure out what you think is going to happen in the next 10 years. And I found that an awful lot of companies that are building the future, or what I perceive to be building the future, they're not super successful right now. They don't have huge revenues. They don't have massive profit margins. They are investing to grow. They're investing to build new things that haven't come out yet. If you could have bought, the example everybody uses is Amazon. If you could have bought Amazon right at the beginning, you'd have terrific returns. But when it started out, it was an online bookstore and no one could see how it was ever going to be anything more.
You make some very, very good points there. I want to go back firstly to the failings and the learnings of your failings, because you've been doing it a little while. Can you remember any of those stocks that you bought originally, Henry, that were going to go to the moon or were going to be super successful, and the board was exclaiming that they were, going to be doing this, that, and the other, and exceeding expectations, only for them to fail?
Well, I don't know about going to the moon, because I'm always very skeptical of companies that do say that. But one of the failings I always trot out is Carillion.
Oh, yeah, good one.
It was one of the first firms I ever bought. I bought it for the dividend yield. I bought it because it was a big FTSE listed construction firm. I work in construction, thought I understood it, and it went bang, basically, and took my money with it. And that, for me, was one of the biggest eye-opening lessons I ever had, because I listened to what the board was telling me all the way along. Don't worry, it's okay, we've got enough money, we'll turn it round, it'll be fine. And I listened and I believed it, and I had, conviction that I knew what I was doing. And that conviction lost me, I think at the time it was about 5% of my portfolio, which was, quite a painful beating to take early on.
Yeah, indeed. And you know what, Henry, you weren't the only one. And unfortunately, there was institutions that lost their stakeholders a significant amount of money regarding that. And there's been a few more incidents since then regarding sort of companies that have said they're going to do well and have just gone, delisted. And unfortunately, going forward, there's going to be more. And what we're seeing now are people and institutions questioning the validity of some of the accounting that's being done by the big five or the big four or the big six that are out there that are doing that. And the case is, where's the redress? Where's the reparations
Well,
for
no
people that have lost money. Say again, sorry?
There's no consequences whatsoever. You know, I've got a very similar situation at the moment with S4 Capital. I'm invested in that. They've had 2 halts now on putting the accounts out. KPMG, I think, are the auditors, and supposedly they've got a staff shortage. Who knows? Maybe in a week or two, I'm going to get another, sock in the eye and be sat there going, why on earth did I go anywhere near this? But there is very little redress as a retail investor to actually call up S4 Capital or KPMG and go, oi, pull your socks up.
Well, it goes back to this argument that, and debate we've all had on Twitter regarding the FCA, FSA having teeth. Do they have teeth? And do they actually do anything? And when have we seen action regarding CEOs, CFOs, or accountancy firms being punished for some of their behaviours and at the cost of shareholders? I mean, we as private investors create a lot of liquidity, and we also create a lot of noise. So there are institutions and funds that go, actually, we don't want nothing to do with retail private investors because they create too much havoc. But without us, there wouldn't be the liquidity. Without us, there wouldn't be people on Twitter talking about this fund or that stock, and therefore giving them free marketing regarding the positives that they're doing.
Absolutely.
So,
well, I mean, you look at. I think retail investors are incredibly valuable, just because of the huge breadth of reasons that they want to invest and the huge breadth of reasons that they want to sell. You get a lot of diversity with retail investors, whereas with institutional investors, they tend to fall into a few major buckets. You want to generate an income, or you're investing simply because the firm is big enough. Large funds can't invest further down the market cap scale because they move the prices themselves. Whereas with retail investors, I think you really make a market. I think you and I have often bought and sold shares at the same time. You've bought into something just as I've sold it, and vice versa. We definitely don't agree. Well, I get free lunch off you, as it were.
Oh dear. Right. So you mentioned Cathie Wood, and obviously she's one of those individuals that have changed the landscape of tech and innovation investing. And you talked about her buying stocks and companies that are building for the future. You mentioned Amazon and you mentioned Google. Everyone's looking for the next Amazon and Google. I had this conversation with Edmund Shing just a couple of weeks back on the Investing Matters podcast. And it's impossible to find the next Amazon, Microsoft, Apple, Google, because there's only those. They are what they are, but everyone's looking for the ones that can emulate. And as you say, who would have purchased Amazon at the beginning?
They're totally different companies now to when they started. They are absolutely different. And I honestly believe if anybody sits here and says that they knew that Apple was going to look the way it does now 20 years ago, they're just lying to you. They really are. They might have thought it had a successful model. They might have been interested in the CEO. They might have liked the products. But there is no way they could have looked forward 20 years and said it would look like this. Not a chance.
Absolutely. And this is precisely the reason, I think, or one of the reasons why Berkshire Hathaway and Buffett and Munger did not invest in Apple. They waited and waited and waited and waited. And it was like, oh my gosh, you know what? Actually, this is one of those companies that could actually do quite well longer term. And they only bought into it recently, X amount of years ago. And all right, they went in, then lumped in, then lumped in again. And it's probably their biggest and most successful value-wise added to their portfolio ever. Thereabouts.
It's got to be one of his best ever.
Yeah, but they were late or looked to be late in the game. So you can wait. You don't have to be, pulling up trees to be the first person in Amazon or Apple or Microsoft and still do well. And I think it was only a few years back, people saying, you know what, Microsoft, they've done as much as they possibly can do and they're not going to go any further. And look at them. They've just carried on and carried on,
Half of the world's computers are run on Microsoft software. Half of people's jobs are run on Excel and Outlook. If you think Microsoft's gone, I just think you're wrong. They're as close to a utility business as you can get these days, I think, well, outside of a utility business.
Yeah, absolutely agree. So with regards to that then, and you're mentioning building for the future, and you're looking at stocks that's not too overpriced and all the rest of it, are there any companies at the moment that you've recently bought or currently got in your portfolio that you would deem as being one of the companies that are building for the future, that are innovative, that could be around in your portfolio for quite a while?
I've got two.
Go for it.
One of which we share, which is Darktrace.
Yeah, okay. Yeah, that's going through a flux at the minute, isn't it, at the moment?
It is. It's volatile. It is all over the place. And I've actually started trading it as much as I have investing in the long term. Okay. So I've kept a consistent position since I bought it, but the size of that position has not remained constant. And it's the first share I've ever done that with this quickly. But I do believe, cybersecurity, it doesn't take a genius to see that the amount of cybersecurity incidents is on the rise. IT infrastructure is incredibly vulnerable. I don't think most of us really realize how vulnerable it is. The NHS has got, it's something like 50% of their computers running on Windows 2000 or earlier.
I didn't know that. Scary.
Most people don't. It's absolutely bananas. Now, to be fair, there's probably somebody listening to this that's going to pull me up on that, because that statistic isn't right, so don't quote me on it. But it's that sort of principle. A huge majority of their computers are on outdated systems. Now, why does that happen? Is it because the NHS doesn't upgrade? Is it because they don't understand? Is it because they prioritise, health outcomes over IT outcomes? I don't know. But it's a massive risk. And if that's happening in the NHS, what do you think is going on with the traffic light system, or the Bank of England, or the energy grid? It really is terrifying. I say to my wife quite regularly, what could you prove that we owned if all the banks turned off their records tomorrow? You've got a bit of paper that says, oh, well, I had £5,000 in my bank account last month. Great, okay, really? Or did you fake that on a printer? What would you do with that bit of paper? How would you go and get your money back? We can't actually prove that we own things outside of servers and computers and so on. And so if that infrastructure is tampered with, we're hugely vulnerable. It's one of the reasons I'm not particularly keen on digital currencies as a concept.
You make a really good point there. I think the additional to all of that NHS education, armed forces data, everything, banking data, is the growth of AI, AR, augmented reality, virtual reality, and all these digital identities that are going to be growing in the metaverse as the conversation keeps going on. And how do we secure that? How do we know that Henry Viola is Henry Viola? How do we know that Pete Higgins is Pete Higgins? And that is reason why I'm invested in Darktrace and other aspects of that sort of side of things. And I'm seeing them using natural language programming and all the rest of it, and AI to be at the top end of that. And the concern of late has been the scare or the worry of, I think it's between 75 and 85 million pounds of shares that employees own, and whether or not they're going to be selling their shareholdings at the beginning of May. Now, I actually feel for the Darktrace employees, because they had a lock-in for a year, and the share price has gone from IPO price, whoosh, come all the way down now. So in 2 weeks' time, if they were to try and sell, and some of them will, because it's free money for some of them, for most of them, should I say, and they'll see it as free money rather than an investment because they're not investors, will be selling right at the very bottom. Yeah. So I've invested as you have. I've watched it go up. I've watched it come down. It was over £5, I think, shortly after I bought it. Recently, jumped on good news. Came out with good news again. And then the market's just gone down. And it's sort of sitting at, I think, was it Thursday, 364 or something like that? Yeah. So come Tuesday, we're recording this on Monday the 18th early because of extenuating circumstances. So the markets aren't open today. I would suspect, unless the market is being kind, Darktrace is going to drop again on Tuesday the 19th. And where it will finish and be when some of these Darktrace employees actually sell out, I don't know. What I'm planning to do, and this is no advice or recommendations to anybody else, is I've taken 2 tranches already. I watched it go up. It's come down a little bit. It's probably going to go lower than my lowest purchase price. I'm buying some more at some point between now and the end of May, with a view to holding that for the next 3, 4, or 5 years, if they carry on generating revenue. If they can't, and there's a worry that Amazon, Microsoft, Google, and others are going to creep into their niches and eat their lunch, and if they don't evolve, they'll either get taken over or their revenue growth will just get spanked. And what will I do? I'll have to sell it out at lower than I bought any of my tranches and take a loss. But what people have to realize is that every stock you and I buy, there's no guarantee of profit.
No, exactly.
It doesn't matter what the CEO or the market tells you, or the best people out there are telling you that's going to happen to that stock. And people had this conversation in the last podcast about people ramping stocks. That's part of the reason, as you know, Henry, we've spoken privately. I've stopped saying on the Monday at 8:15, I bought this stock, there you go. Because I don't want to influence anybody. I'm not putting a SWOT analysis out there to say, this is the reason why I'm buying this stock. I don't want anyone to buy it. You know what I mean? Let the stock up there on its own steam.
If you follow me on Twitter or you follow my blog, I do talk about shares I hold, but I don't tend to talk about them a lot. So I will occasionally mention that I hold something, or I'm invested in something, or I'm interested in an area. I might only do that for that company once every 6 months. It tends to be when there's an RNS update, and that's about it. And I'm very, very suspicious of people on Twitter who you look at, and there are 2 or 3 companies that they mention, and they talk about them all day, every day, nothing but, really? How boring are you? I mean, come on, have you not got anything more interesting to go blathering on about? Maybe
I could mention some stocks at this point, but I think that my trolls and my haters will be like, here he goes again, bashing my stock. Yeah. I'm not bashing. I don't bash any stocks. I'm just telling the reality of what's going on out there. And some people
you've shot the Games Workshop lot enough, but the Investors Chronicle's now keen on it.
You had to go there. You had to go there. All right. Thank you for that.
Fruit.
Oh dear. Right. So you mentioned there was a second stock that you hold as well.
Yes. And I've completely forgotten what I was going to talk about now. Darktrace and S4 Capital. That was the other one I wanted to talk about. I work in marketing and business development in the construction industry for the most part, and I'm now mainly focused on bidding, so less marketing than I used to be, but I've got a huge interest in it, particularly digital marketing. I enjoy writing, which people describe as marketing, but actually the area of marketing I'm most interested in is consumer engagement and business-to-business engagement. How do you attract businesses online? Follow what people want, and how do you create what we call a marketing funnel to educate someone? I'm very, very big on account-based marketing. So that's all around creating a persona, identifying a persona within a business, and then feeding them with information that becomes gradually more and more relevant to what they're trying to achieve over time, with the end result being that they buy something from you. Sometimes that's a widget, sometimes that's a service. And the reason I like S4 Capital so much is that Martin Sorrell and S4 Capital are in a very similar space. They're all focused on digital technologies and how you can reach out to businesses and use digital technologies to engage with them in new and innovative ways. So years ago, marketing was around, putting an advert in a paper or buying a billboard. 50,000 people drive past the billboard every day. 40,000 of them look right and see the billboard. 10,000 of them might pick up the phone and call your company. Today, it's a lot more complicated than that. I mean, for one thing, we're all locked indoors half the time. So you're not seeing any billboards. You're on your smartphone, you're on your tablet, you're on your computer. When you see an advert, when you search for something on Google, the first 3 things you'll see will be adverts. They're paid sponsorship. How often do you click on them? I never do, because I know someone's paid for them. So how do you reach me as a consumer? You've got to find something more interesting than that. Well, actually, Twin Peaks Investing podcast, and it's, let me get it right, SharePad for Sharescope, is it? Now, I use a competing platform, but just listening to the advert on Twin Peaks Investing made me go and have a look at your platform. I wanted to go and learn about it. And then I found a whole wealth of resources. They've built quite a lot of brand equity with me without spending a penny targeting me. They've funded your podcast, they've sponsored it. It's not pushed particularly, but it's engaged me as somebody who, when my research tool comes up for renewal, I may well go and have a look at them and have a conversation. And they've done that simply by providing free educational resources to me and not really targeted at me as such, but my sort of sector of consumer. I find that whole thing absolutely fascinating. And I think S4 Capital is in absolutely the right place to capitalise on it.
Yeah. A couple of things there, Henry, as full disclosure, and you've managed to do it on your first appearance on the show. I have purchased my first tranche of S4. I watched it get absolutely spanked, and I'm waiting to see when the next bit of news comes out as to whether their accounts are good, whether they come out with them in a suitable time. It's not lingering for X amount of months, because the longer it takes for the company to declare those accounts, the worse noise. The noise will just build. It'll become a cacophony. So I have purchased them. I wasn't going to declare it, but you've done a wheelie, so you're not going to be coming back. You're not going to be coming back on the show ever again, Henry. Never again, mate.
I'm carrying the torch for him.
So I do have a little tranche waiting to see what else next happens. The thing for me, and I've been researching that space for some time, and as you know, I think about 3 years ago, I did an extended interview with Sir Martin Sorrell.
It was that that put them on my radar.
Yeah, and I didn't invest at that time because I was doing the research. I didn't want to go on the show. I think it was about £2.50, and it ended up going almost to a tenner, if not more. I could have purchased it then as I was researching. I've gone, whoa, this is a brilliant company, and I like, Sir Martin Sorrell anyway. But I didn't want to go on that show saying, oh, here I am, I'm going to interview this guy, and I purchased the shares. You guys should listen to this guy and then go and buy it.
I won't buy it. To talk your book more.
I can't do it. It's just doesn't sit right with me at all.
Thing called ethics.
So I didn't, and then I watched the shares go up and up and up. So this was, I won't say my first opportunity, but I thought, if people are willing to buy it for X, and now it's come all the way down here, unless something's significantly wrong, and he's got most of his, not most of his wealth, but he's got a significant bit of his wealth invested in S4. And he's got all these entities that he's purchased with half of the balance in shares. All those other entities that he's purchased since IPO, they're watching the share price come down. They're going to stay invested, aren't they? Yeah. And aren't they going to want to rectify and be even more profitable going forward? So that's the reason why I've purchased the first tranche. Wait and see what happens next. If it comes out and it's completely, and he's tarnished his name and his brand, and the share price goes wallop, it's not a big hit. It's only a small percentage.
Yeah.
But yeah, so I've done that. But what I wanted to touch on regarding that, and I won't tell you the name of it, there's a company I've been researching overseas, and where it's got its largest market, a lot of the buildings are high-rise buildings. So you get into the elevator in the lift on the ground floor or the third floor or wherever, and you're going up and down and up and down. Their advertising, Henry, is in this whatever size box that you're going up and down. You're trapped in this
genius, absolute
in this
genius.
lift with nowhere to go, with this advert playing for whatever duration it is that you're in this lift going up and down.
Yeah.
And I thought possibly a
really
unique
clever marketing
model. So I haven't finished my research on it yet, but I've got my eye on that particular company, and it's only because of I was researching S4 and all the different ways that other companies are doing stuff that I came across this. And this is what I was saying about sometimes when you go down a rabbit hole, you discover things about other peers and competitors that you may never do. Yeah?
So true.
This is a quick hello to you, our valued Twin Peaks Investing podcast listener. Whatever channel you're listening to, please make sure to subscribe, and you'll always be the first to get the new episodes. Thank you for your continued support.
So that takes me to the next bit of your bio that you sent me. And you were saying oil stocks, O&G stocks, absolutely never going there. Is that from experience, losing money, or just the fact that you just see them as a hole in the ground that just throwing money at?
It's actually neither. I think they can be hugely profitable. It's an ethical concern I have.
Oh, go explain that then. Go for it.
So And I can already hear people grinding their teeth at this, because I know a lot of
No,
investors that are...
absolutely not. I mean, listen. Almost every pension other than ethical ESG pensions are invested in
Oil and
BP,
gas.
Shell,
Yeah.
Rio Tinto, Glencore, and the rest of it.
Yeah.
You know, so go on, make your point.
So it is about the emissions. I believe that the world needs carbons, like we do. We use plastics, we need fuels to transport food, we need fuels to run tractors that dig food out the ground. Fine, okay, we need these things. But we are destroying a catastrophic range of wildlife. As a species, we are devastating natural habitats. Temperatures are rising, pollution levels are rising. Now, I've touched on 3 things there, and some of them are related to oil and gas, and some of them may or may not be. I don't want to get into the whole greenwashing thing. But my concern primarily with oil and gas is the pollution that it puts out. Now, whether or not you believe in climate change, you know, would you go and breathe in the fumes from your car? You know, would you go and stick your head against a running car exhaust pipe and breathe in the fumes? Of course you wouldn't. It would stink. It would choke you. You'd feel incredibly unwell, right? Now, do you want more of that on the planet, or do you want less of that on the planet? I want less of it. You know, I do want less of it. So whilst I acknowledge that I use cars, I use public transport that is run on fossil fuels, I will not fund oil and gas companies to extract more of them out of the ground. I would rather concentrate on other areas of the market that don't contribute towards pollution and carbon emissions. And I'll leave the oil and gas to people that have got less of a problem with it. You know, and my hope is that in my lifetime, we will stop burning fossil fuels. I really, really hope we do. When I say we, I mean we as humanity, which is a huge thing to say, considering China throws out, I think it's 1/3 of world emissions. You know, so whatever little old UK does is completely irrelevant in the long run. If China doesn't stop, we're all up the creek. But
yeah,
you know what I mean? And so I don't actively invest in oil and gas. I may hold some through my pensions. You know, I've got pensions in tracker funds, and like you say, nearly all of them are going to have BP and Shell in. So I'm not going to be holier than thou and say I've got none, but I won't actively pick any.
I think that's a fair point, and we've all got to invest the way that we're comfortable, Henry. You know, and I think the beauty of what you've done historically is that you've not rammed that down other people's throats either. I don't think anyone who would follow you would know that every time someone's put a tweet out regarding an oil and gas company, you're just jumping going like that, because you've left it to make their own choices. I think that's admirable, mate.
Yeah, because who amongst us is whiter than white? You know, let's be honest here. We've all got things that we do wrong. We all make mistakes. We all do things that are, you know, questionable to other people. And I'm not delusional about believing that I'm some, you know, white knight that never makes a mistake. I will, if asked, I will happily have a conversation with you about why I don't invest in oil and gas, and I'll encourage you to do the same thing. But if you disagree with me at the end of the day, it's your opinion, it's your portfolio.
Yeah, absolutely. I think the good thing there is also pointing out that, you know, we all make mistakes, and some people would appear, and Willie and I raise this all the time on Twitter, they don't make any mistakes at all. Oh, wow. You know, when the profit warning arrives, they disappear. You know, when the takeover arrives, they've got the stock.
It amazes me. Yeah, it really amazes me. The amount of people that will mention a stock for a period of time, 6 months, let's say, fairly consistently, and then all of a sudden they'll stop. And if you look at the share price, it's because the share price isn't going anywhere, or worse, it started trending down. And eventually some bad news comes out. You know, the market tends to reflect what's going on with the company. And by the time the profit warnings come out, they've stopped talking about it for 6 months. The share price collapses, and it magically turns out that they sold 2 or 3 weeks ago. Really? Come on.
Yeah, it's a recurring theme, mate. And we voice it on this podcast just to try and get everyone else to be a bit more objective and encourage people to actually look out for these kind of accounts so they can avoid them, because they're not learning anything or gaining anything from it. I want to go back a little bit, if I may, Henry, regarding the oil and gas and avoiding that space, and ask you with regards to that, how are you countering that in a sense of do you actually go out of your way to try and find some ESG related investments? Do you hold some? Have you considered some? Are you pro those sort of strands of investing or trends of investing?
I dislike ESG as a phrase, if I'm honest. And again,
Fine,
that will probably surprise people, but mainly because of impact. I find a lot of corporates will talk about ESG, they'll talk about diversity, they'll talk about inclusion, they'll talk about decarbonisation. They won't actually do it. I have caused no end of a ruckus at companies I've worked at for yelling at senior directors, stop blathering on about how great you are at ESG and actually do something. I would rather companies didn't talk about ESG at all and cut their carbon emissions by 50% every year than talk about it all the time and spend money on departments and actually only reduce it by 10%.
Fair point.
It drives me absolutely bananas, to be honest. It's the virtue signaling of it. One of the reasons I don't talk about ESG a lot is because I've only got limited ability to influence it myself. So I work for a construction business. We dig holes in the ground. We dig up trees from time to time. Yes, we do. We've got diversity targets that probably aren't as good as they could be. What can I do to change that myself? Not that much. I can encourage, I can try to influence within my sphere, but I can't unilaterally go and upend the entire company. So for me to go and start browbeating other people about it, well, really, is that fair? I don't think so.
No, you make a very, very good point there, mate. And I think the beauty of what's going on now is that we've got a generation, almost my daughter's age, teenagers, 14, 15, 16 years of age, that are the future leaders, and they're far more vocal than we ever were at 13, 14, 15 years of age. And I'm hopeful that they'll be a catalyst between the ages of the teenagers we've got now and the people of a similar age to yourself.
I do hope so, yeah.
That will make a significant push to enable some of that to change. Will it change in the next 30, 40 years? They've got all these Paris Agreement targets and all the rest of it regarding transitions to new energies and all the rest of it. I'm hopeful, Henry. Will we get there where all electric vehicles will be running in our lifetime? I don't know.
I think cars will be gone. And I don't just mean the internal combustion engine. I mean individually owned vehicles.
Or car sharing and all the rest of it.
Exactly.
You mean? Right. Okay.
So for me, individually owned cars for households are complete insanity. I think we're going to look back at individually owned internal combustion engines as the same way we do cigarettes today. You don't really meet people today going, cigarettes are great for your health. Go back 100 years and doctors used to encourage you to smoke if you got bad lungs. Today...
The thing is, and I'll interrupt you at this stage, is the fact that we had this old adage of, and we'll use the term as it was used there, a man's house is his castle sort of thing, that sort of analogy. Yeah. And then the second one to that was the person's car is their second castle. This is you're in your car, and people are very passionate about cars, almost as if, in America, culturally, they're passionate about guns, So asking people to give up cars, Henry, and not sharing.
I don't have to ask you to give up.
No. But I'm not saying you have to ask them. But
no, I think there will be a more convenient alternative. I'm not. I don't think we will have to ban them. I'm saying I think there will be a more convenient alternative discovered within my lifetime.
I thought we had that with the tram. I thought the whole point of making sure the trams
putting down a set of fixed rails that go between point A and B. No way. No way.
This is it. Well, this is what they were saying. We'll reduce the number of cars. Nottingham was one of the first, was it not?
It was. Oh, the Nottingham tram. I'm going to put a shout out to my wife here. She loves the Nottingham tram. She loves the London Underground. She loves the Nottingham tram.
Let's make sure we just said that correctly. Not the Nottingham tramp. That's Henry Viola Hare. The Nottingham tram people. Okay. She married a good one.
I think what we're doing right now, talking over camera, I can have a fantastic conversation with you. I can bore all your listeners to death for an hour without having to travel up to Leicester. Now, who would have said that this would be possible 10 years ago? You needed to go into a production studio to do this. So that has reduced my requirement to get in a car once today already. Now, I don't have to go to the office as much as I used to. Commuting times have changed. You know, getting on planes, getting on I just genuinely think there are going to be alternatives that we can't comprehend that will be discovered. You know, you look at mobile phones, for example. Who 20 years ago would have said that the PC would effectively be replaced by a device in your pocket? PC sales are on the decline. I'm talking to you off my PC. I love it. Absolutely love my PC. But I think I am in the minority. Most people want a tablet. Most people want a handset. Now, that will be replaced eventually, I think. I think we're going to have something we can't even comprehend yet. And I think the same thing will happen with cars. Some device that we've not comprehended, some new form of transport will be invented, and the internal combustion engine, the personal car, will be a thing of the past.
Well, I think you've got a point there, and I think it's just a case of when. And you see lots of innovations going on, and I also often see these things. My wife's a big sci-fi fan, and I see these different ways of modes of transport and all these different films going forward, and you think that's a pipe dream, you know, and you think, okay, but what did we see on various films we were seeing, you know, from the 80s and the 90s, and the innovations that have just been enhanced since then, and we've got now. So it is
the amount of things that have come off Star Trek.
Yeah,
you know, the personal communicator they've got on Star Trek. That's your mobile phone. They had was it pads or something? That's tablets. They've not invented instant transportation yet, but I'm sure someone's working on it. And you know, we've got what's its face, Musk working on, and other people working on hyperloops to go between places as well. So well, that's another topic, isn't it, Elon?
Yeah, we're going to get on that. I'm going to take a little break at the moment here, Henry, and just help me out a little bit, because I'm going to just talk about the markets just briefly, because we're in a situation where the markets are closed at the moment. And the markets closed on Thursday, at 7,616, up 0.4%. We're still towards the higher point of return in the 52-week high. And I was having this conversation with Pete on the last podcast, and I was a little bit, not uncomfortable, but still, you know, a little bit cautious regarding the markets, because we've got all this noise. We've still obviously got the horrible Ukraine situation going on, the war there, and the markets are sitting, you know, the high's there, 52-week high, and we're literally here. And there's all this downward risk, and I'm thinking, I'm not comfortable here with the markets. I'm happy that the portfolio is near it. My portfolio, anyway, is near it to its all-time high because of how I've constructed it and all the rest of it. But I'm not sure about you, Henry, but where do you see the market in a sense of, are you comfortable with it? Are you seeing it going higher for all these positive reasons? Or are you also thinking, No,
I am exceedingly nervous, and I have been for several years. So if you've read my blog, I have been talking about quantitative easing and the damage that is doing to public markets for years. I think within the next couple of years, we've got the potential to really significantly destroy wealth in public markets if we're not careful. Interest rates are starting to go up. Bond yields are starting to go up. We've got more debt swilling around the system than we've ever had, both relative to GDP and per capita. This is a very risky market. There are very few alternatives, and there have been very few alternatives to public equities for retail investors for a long time. If you're after yield and return, you couldn't get them elsewhere. That's going to change. That is changing. And the huge risk for people is that they stay invested as these markets go down. You know, I was listening to this podcast yesterday, and this chap who works for a family office was talking about the clients that he has. He works for what's called a multi-family office, so there are a large number of wealthy families that are grouped together. And their big concern is not how to squeeze another 10, 15, 20% out of the market this year, but how to not lose 50% in the next 3 years. You know, they are seeing that the downside risk is very real. You could lose 50, 60%, and they want to position themselves so that they only lose 20 or 30%. when the rest of the market loses 50 or 60. They are not positioning to continue chasing things higher and higher. And I largely speaking, am of the same mind. I'm positioning in risk-off assets very much. You know, we talked about SFOR and Darktrace earlier. To me, those are risk-on assets. They are pre-revenue. They are very highly priced. They are long-duration equities. They make up 2% of my portfolio, I think.
Yeah.
For the most part, I am repositioning into things that I think have got less downside risk.
Yeah. Well, they've got the revenue. They have not necessarily got the profitability as yet, those two. I think the aspect you're talking about there regarding the family offices and obviously lots of other entities as well is more about focusing on capital preservation. And I think a lot of people, Henry, unlike yourself, are more focused on how much money can I make. They're focusing on winning rather than not losing.
Yeah.
And I'm not one that's ever invested, I think, ever regarding fear-based behavior and fear-based investing. But I've always been cautious about making sure that I've measured what my downside risk is, which is, you know, It's not just about position sizing. And I will speculate and I will go and choose some stocks, which I know we've had conversations in the past, Henry, where you've scratched your head and going,
what are you doing?
What you doing? Exactly those words, you know. And I position size accordingly regarding those stocks that I take, you know, a bit of risk on. But I think not enough people, Henry, actually look at downside and look at capital preservation, look at, you know, the 100% of my invested wealth is this. Actually, I don't want it to be 50% of this in a year's time.
Well, I question what it will do to your mentality. I dislike fear-based investing as a phrase because you're right. Yes, you are investing out of fear, but you're also investing, to my mind, to protect yourself.
Absolutely. Absolutely.
And just really question yourself. You know, some people listening to this podcast will only have, say, 10,000 in their portfolio. They're just starting out. You lose half of that. Well, fine, it's 2 months' salary, let's say. You could make it back. It doesn't feel that significant. Other people may have several £100,000 invested, maybe several £1 million invested. Now, let's say that you drew down 50% and it stayed down. We're talking Great Depression levels of crash here, not 2020, it bounces back in 9 months, but it stays down for 10 years. How long are you willing to be sat on a loss of £500,000 for, really? To look at your portfolio every month for years and see that you've lost 500, 600, 700,000 pounds. What would that do to your mentality? What would your wife say, or your husband say, or your children say? Really, to be for years, oh yeah, no, don't worry, it's going to come back. Don't worry, I've got it.
Yeah,
I'm not sure I'd be that comfortable.
Yeah, and a lot of people are not, Henry, and we saw that when the Brexit vote happened and the markets crashed that day, you know, and stocks that were blue chips were falling 15, 20, 25% on the day. Yeah. And we've seen that a couple of times since then. People are very impatient. They can't deal with losses. It's doubly, you know, when you win, it's like, woo, 2 times, you know, and when you lose, it's 4 times. Yeah. The impact psychologically. So I think
you never know that it's going to come back. It's all right.
No, you don't. And this is the conversation I've had so many times with different fund managers. You know, we've had maybe I think Edmund Shing, Idle Investor, touched on it. He said we've had almost 40 years of this market being good for everybody.
Yes,
and the last couple of times the market's had a wobble, it's come back immediately. So those that have been invested for the last 5, 10, 15 years have had no experience of that long duration of flat markets or declining markets. So they've been spoiled. And I don't think, as you say, many people have experienced it or will be willing to experience, whether they've got a £10,000 portfolio or a couple of £1 million portfolio of their stocks holding down and sitting there and being in the red for more than 3 months.
Really question. I mean, it's easy to justify why you bought something when you're up 10%, 20%, 50%. Very easy. I was clever. I bought a good company and it's worth more because it's grown. Great. Well done. Pat on the back. If it's the same company and it's down 10, 20, 50%, were you really so clever? You bought this company, but the net effect has been that you've lost half your money. Very well done. Yes, very well done. And that is the question you've got to ask yourself. I mean, I've got a share, Money Supermarket, down nearly 50% from where I bought it. And I look at it and I tell myself it's a good company. But what has been the net effect of my effort researching it and investing? I've lost half my investment in it so far. So what was the point? I might as well have gone down to the casino and put it on red as things currently stand.
And this is the harsh truth of it, you know, and it goes back to the sentiment that Pete and I have. You know, you're openly talking about Money Supermarket here, and you talk about the losses on your blogs and your tweets about what's doing well and what's not doing very well. And you, me, really, and a handful of others will do that. But there's very few individuals that will talk candidly about, I made a mistake here, I made a loss here. This company is, you know, causing me concern because they've said this and said that, but actually they haven't delivered. And now I might have to take a loss. You know, I think it was last week or a few days back, I sold Inland, done all the research on it, spent not the usual 100 hours, not that it would have made any difference, but I found that the sum of parts of this stock and the NAV of this stock was double what I was able to buy it at. So here I am buying at 40 odd pence. The NAV's up there at £1 odd. Easy peasy. What could go wrong? It's a construction company. It's got a margin. It's doing okay. Heaven forbid, Simon Thompson loves it from Investors Chronicle. What could go wrong? And I'm buying it and the share price goes up. And I'm thinking, off to a winner here. Comes down a little bit. I'm thinking, even more of a bigger bargain. It comes down some more. You know, I mentioned it the other week, you know, MD, you're in construction trade, right? An MD who's being lauded and he's going to be potentially the next CEO. And then the RNS is being fired with immediate effect. I'm like, what?
That doesn't happen by accident.
So I'm thinking, what's the next shoe to drop? And I ponder it and I think about it. I sold it last week.
Yeah.
Right.
You just
took the loss.
Hold it for the risk. You don't want to be the bag holder when the bottom falls.
Because you know me, Henry. Ordinarily, I'm buying something and I'm looking on a 1 year, 2 year, 5 year view of the stock. I'm not buying it for a trade.
Yeah.
And I just thought there's better things out there that I can be dealing with or involved in. So just sold it, took the loss, moved on the chin.
Yeah.
You know what I mean? And I can then reinvest that money somewhere else, or as I've been saying since November, I can just build up my cash hoard and wait to see what happens to the market this year and what happens to it.
Whether you are an experienced or new investor, you know how valuable it is to conduct portfolio enhancing analysis and to have easy access to data that will give you the edge. As a Twin Peaks investing podcast listener, you can access an exceptional offer via SharePad from Sharescope, the UK's #1 investment data and analysis software for private investors and traders. This special Twin Peaks offer is available to new subscribers only, and you can subscribe using the promo code TWINPETES. The incredible and exclusive offer means that monthly subscribers will get their second month free, and annual subscribers will get their 13th month free. Sign up and subscribe to SharePad today using the Twin Petes promo code, and you can save up to £69. Visit sharescope.co.uk/SharePad for further details and subscribe to the investing and trading analysis and data you need.
My concern, and I've raised this with you in the past, and you've said, you know, given me your point of view, we're both almost in the same camp. We're investing despite our concerns, and we're trying to be prudent in trying to invest in the best value we can find while still being overly cautious. And the situation has been for a number of years now that markets, stocks, investing, funds, etc., have been climbing this wall of worry. But I think we're in the same camp where we think that that wall of worry is going to sometimes, at some point, hit, and reality will bite. And it's just a case of when, because these stocks can go like that.
It is as Warren Buffett says, interest rates are gravity to stock markets. Interest rates have gone down, stock markets have gone up. That is reversing. You can't deny it. It's a fact. They are reversing. So what do you think will happen? Do you think markets will break that rule and suddenly ignore interest rates? No,
they won't. And to compound that, the conversation we've had as well is about inflation. And every single thing is going up. And you can see that in the construction thing.
Oh, yes.
Every single thing.
Steel,
I'm hearing...
concrete, labour, it's all going through the roof.
The thing, I was having a conversation on Saturday with a friend of mine, and he threw this out there to me, and I went, oh, that material prices have gone up so much that construction projects are not getting finished. The ones that have got construction projects that have been budgeted at a certain level, there are individuals going out there sourcing material by illegal means. Yeah. Committing crimes to get hold of materials to get projects finished because the budget have been met at this level.
No doubt about it. You know, if you've got a 2% profit margin and all of a sudden your materials go up 10%, what do you think will happen to your business if you've not got a big stack of cash behind you? You will go under. The whole thing will collapse. Now, the large listed companies, all right, fair enough. Some of them might be able to weather it a little bit, eat into the margins, maybe put their prices up, maybe. Smaller firms, the tier 2s and tier 3 suppliers, the specialist contractors, they cannot. And, you know, one thing that I can tell you for sure, there are a lot of sharks in construction. You know, it's not a huggy-feely, happy-clappy kind of industry. It's changing slowly, but there are a lot of sharks out there. And they wouldn't think twice about going and borrowing some materials off someone else's site, you know?
Indeed. On that note, because I should ask you this question. Given that you are in you are in construction, do you actually own any construction-related plays, Henry? Because this would be quite...
Well, actually, I do own one. Michelmersh Brick Holdings.
I hold that as well. Are you just looking at my... That's not good. That's not a good look, by the way. You holding that as well. I've had that for a few years.
No, I do. I've only bought them recently.
Okay.
Actually, there's two. There's them and Vistry.
Right, I don't hold them. That's cool.
They used to be Bovis Homes.
Yeah.
I like house builders. I do like house builders. I used to hold Redrow.
Okay.
Fantastic company. Really like Redrow. The CEO, really, really nice chap. I forget his name now, but I met him once years ago. Really nice guy. But by and large, I don't hold construction industry holdings because I don't like the business model.
Cool. So on that note, then, what business model and investment sort of thing is your preference? You know, where have you found your niche? You think that's the area that I'm most
you're digging at. So I really like companies with a strong return on invested capital, good profit margins, growing revenues. Construction, I find the margins are just too slim. I've got a lot of REITs, you know, Warehouse REIT and Shed are two of my top holdings. I've also got Gore Street Energy Fund, which is a big battery storage business. I like REITs because I can understand the net asset value and I can buy relative to that net asset value. They tend to be good income plays, which I like. And I find them easy to value, relatively speaking.
Okay, so tell us about some of your REITs then.
Well, the two I've just mentioned, Shed and Warehouse REIT, they are in logistics.
Right.
You know, home shopping is on the rise. It has been for years, and it doesn't take a genius to see that the more boxes we buy from Amazon, the more space you need to store the boxes close to your house, the more space you need to store the goods that go into the boxes, and the more space you need to assemble those boxes, you know, putting the things into them. And there is a huge shortage. So companies like Segro, who are another logistics play, tend to own these big, massive fulfillment centres. Yeah, out in the middle of nowhere. You know, if you're on the motorway, you'll go past them and they seem to go on for miles. Warehouse REIT and Shed don't own that sort of thing. They own the little nondescript thing that's literally at the end of your road. So when you buy something from Amazon, now they've got this same day fulfillment. Not on everything, but you can buy something at 9 o'clock and it's with you by 1. How the heck does that happen? It happens because it's actually being stored at the end of your road in a shed owned by Warehouse or Urban Logistics REIT. to me, that is a brilliant model. They're very prudently run. They don't take on too much leverage. They're not into anything flashy. They are an essential part of the supply chain, and sites that councils are willing to allow to be used for that sort of thing are actually quite hard to come by. Councils don't want residential areas being taken up with loads of warehouses. They want shops, they want offices, they want restaurants, they want homes, because they can charge council tax and all of those. You can a little bit from warehousing, but as far as I'm aware, it's on a slightly different banding. They also don't look as nice. So
yes, that's a good point.
They just don't. So councils are reluctant to allow rezoning. So urban logistics and warehouse are buying up these sites, and they can let them out on long leases. And I don't think that business model is going anywhere but up for a long time to come.
I would have to agree with you. I think the beauty of the model is the fact that demand is outstripping actual availability of warehouse space. And no matter where you go, and unfortunately you have to drive on the roads, Henry, you go on the motorways and other spaces, you see another build, another warehouse. There's constantly building because the demand is there. And I think the other aspect of it as well is, given what's happening, we were talking X amount of years ago about globalization. Now we're talking about onshoring again.
Yes.
So that's going to be something we're going to need. All of this needs storage. All of this needs space. So we're going to go and see more and more. And over the past, I'm not sure the number of years, that the property space, investment wise, that's been the highest, has been about the commercial space. That's been warehousing, logistics space, profitability wise. So those companies have been outperforming some of the normal builders and landlords. So yeah, it's a sweet spot. Most definitely a good area to be in. So yeah, some good picks there. I want to change things up a little bit, Henry, because you and I and Wheelie and everybody else that we've met virtually on social media have done most of it on Twitter, right?
Yeah.
So last week and the past week and a half, there's been lots of noise regarding Twitter. And I'm not sure we said his name yet, but we're going to say it now. Elon Musk came out of the woodwork.
What a guy.
What a guy. Yeah. And said he had bought a stake. And then he moved on and he said, I want to buy the company at $54 plus per share for $43 billion. What are your thoughts on this? And you've already said he's a brilliant guy. What are your hopes and aspirations regarding Twitter?
I honestly hope he shakes it up. I love Twitter as a platform. It's my most used social media tool. I've met some wonderful people through it, yourself included. We would never have met if it wasn't for Twitter. I think Elon Musk has got a fantastic track record of doing some really far out there things. I think he does it in a very disagreeable way sometimes. I think what he said about that poor diver, when they were trying to rescue those kids, and
Yeah. We won't go on that subject. No, but I remember what you said. Yeah. And he's trying to dig up dirt on the person. Yeah, exactly.
For goodness sake, just be civil. Politeness and dignity, cost you nothing. Having said that, the guy, Tesla, I think, is doing some really interesting things in the battery space with remote driving and remote sensing. His Hyperloop ideas, his space travel ideas. Like, what a guy. He is a visionary. He's willing to put his money where his mouth is, and he's willing to shake things up. You compare that to the board of Twitter. Oh, great. They've presided over, I think it's an 8% share rise in 10 years. So they've basically gone nowhere. Well done. That's great stewardship of your company. Yeah. So my hope is that he puts a rocket under them, whether he buys them or not, and I'm not sure he will, but I'm hoping he's going to put a rocket under them and really shake things up there.
I'm caught in two minds, Henry. I did invest and was invested in Twitter. I purchased it back in 2016 when it was unloved at $14.14 a share, and I sold it in 2018 at $30.02 per share. And I had it on my radar this year. I had a bit of a Twitter conversation debate with somebody, and I thought, actually, this person's got a point. I need to go and buy a content stock. And I had two stocks in mind, and one of them was Twitter. And then I read about the litigation stuff that may be upcoming regarding Twitter, and I didn't buy Twitter. I chose the other one. Consequently, the other one's doing not so well, and Twitter's in a takeover consequence. But that's the binary effect of investing, isn't it? My concern regarding the positives, and let's talk about the positives. The positives of Elon Musk coming in and making this bid and all the rest of it is that it might actually get the Twitter board to get their act together. They don't own a large skin in the game regarding stake in Twitter. Yeah. Other than Jack Dorsey, I think they own about 3.5%, if that, as a board. I may be out one plus or minus 1%. So although Jack Dorsey is the second largest shareholder, individual shareholder, despite Vanguard buying an additional amount, Elon Musk is currently still the largest individual shareholder in Twitter. Vanguard, BlackRock, and the others are custodians of the stakes that they hold in Twitter. Yes. That's a very important point. And the people that own those ETFs, do they get to vote if they get the chance to say whether or not Twitter gets bought? Or is it going to be BlackRock, Vanguard voting themselves? So the positives could be he shakes it up, or he forces the Twitter board to be more innovative and invest more in R&D and make all these different trolling things that go on and make people verify who they are. So they have to come on Twitter and say, actually, I'm Henry Viola here. Here's my picture. Like LinkedIn. LinkedIn, I don't think they have avatars. Well, I think you can have avatars, but you have to use your real name. Yeah. So maybe then it gets rid of the duplication and all these people that have got multiple accounts talking to each other that are ramping stocks. Yeah. You know, maybe it will get to the point where there's more money made, so women and other people don't get abused because of their personal views on certain things.
Yes.
And maybe it'll get rid of the hate stuff that's going on regarding Twitter. I don't know. The downside for me is a big pro on free speech, Henry.
Ooh,
and Trump's gone out and
red button.
Yeah, and Trump's gone out and put together his own platform.
Yeah.
And his sponsors and his people have invested loads on it. It's not quite got off to where they thought it was going to go, and there's probably still time. But if it's wide open where anyone can say any vitriol, then I think it might just tarnish the actual branding of it. It's built on free content. We create the content for Twitter, you and me and everybody else. Yeah. And some people might move away from it. And if the investors and the advertisers, because that's where they're making their revenue, move away from it, then it becomes a brand that's losing money. He said in the past, I'm not really that bothered about making money off Twitter. And he's got the money to be able to do that.
Not directly.
Yeah, but other people are using Twitter to make money. And if they're unable to get away from the people tarnishing what they're trying to do, I don't know if that would work. So I think
free speech is it's a very hairy topic. People like it when it works in their favor. They dislike it when they disagree with it.
Yeah, we've already used the word beginning with T earlier.
Yeah. With someone the other day about it was a political thing about fines for students and fines for the Prime Minister. And a few people, no, Henry, you're wrong. End of conversation. Well, it wasn't end of conversation because we didn't stop. But eventually I just went, all right, okay, I'll shut up. I don't think they should be censored. I don't think I should be censored. I wasn't, advocating that we shoot students or shoot the Prime Minister or anything awful. Yeah. It's a conversation, it's a debate. And I do believe that you should be free to have civil debate. I do not believe you should have the right to abuse people. And there is a line with abuse. And my hope would be that if Elon moves in and starts to make changes to the freedom of speech stance of Twitter, that there's less censorship around ideas, but more censorship of abuse and aggression. Because I think, as you say, having avatars, it allows you to express things in a way that you wouldn't do to somebody's face, or I sincerely hope people wouldn't.
Yeah. Avatars and usernames, having your proper name there and accountability, I think would help it. We've seen, and Wheelie's not here, but Wheelie has spoken about it in the past, and he's done it, and he's blocked certain individuals. There's other people talking about blocking certain individuals now. I practice mindfulness, NLP, all the other good things, and talk about kindness and all the rest of it. And I think, unfortunately, some people see people being kind and generally open to discussion and debate. They see that as a weakness. You've got to be aggressive. You've got to be rude. You've got to be obnoxious. And I've had conversations with people that have been rude and aggressive and all the rest of it. I don't tend to resort to blocking people or muting people or all the rest of it. But I think, unfortunately, sometimes you have to do that. And I had this conversation with Wheelie just recently, and I said, it's really, important that you take care. You touched on it again earlier. You've maintained your own mental well-being. That's the most important thing. So you can be there for your family and there for your friends and there for yourself.
Yeah.
So, I've decided going forward that I am going to be a bit more direct with people, and I am going to try and maintain that. And he practices mindfulness and kindness, so therefore we can bully him and being aggressive. I'm actually going to hit the block button going forward a bit more. I haven't done it in the past with various people, but I am going to do it. And I think the important thing is you have a right to cultivate the conversations that you want to cultivate. And people that are coming on your timeline just to be destructive and rude and obnoxious, they don't add any value.
Yes.
Twitter just delivered this down button where if somebody is added to this timeline of no value, just a downplay button. People are blocking and muting, so why not? I will start using that going forward. So if there are people out there that suddenly you see tweeting saying Conkers who practice mindfulness has blocked me, there must be good reason for me to do that, because I haven't been doing that in the past. So unfortunately, I think Elon Musk has got something there regarding the free speech of it, but free speech must be used where you are being objective and able to debate.
Well,
not
that's
just
also
saying,
true. Yeah, you should verify what you're saying. So, for example, again, over the weekend, I retweeted an article by Citywire, I think it was. Was it Citywire? City AM, the London business paper, about reshoring of manufacturing to the UK. And somebody tweeted at me and said, I said, I think this is wonderful. Hadn't actually read the article in much detail, if I'm honest, just looked at the headline. Someone tweeted at me and said, I don't think there's much to actually celebrate there. Look at the article. And sure enough, there wasn't. They weren't saying it's not happening, but they didn't give many examples of it happening. So I tweeted back and I said, no, actually, you're right. I probably should have rephrased that. It doesn't look like there's much happening. My hope is that it develops into a trend. Whereas some people will just spout things that they know are wrong. They don't bother to verify, but, I think I'll just say it. That's not good. It's just not good for society. It's not good for democracy, and it's not good for people's, intellectual capabilities.
Absolutely agree. So the positives for me will be they could innovate with his, if he comes on board and he can get them on board, innovate, improve, make it even better, compete against Facebook, get rid of the Facebook type of activity that's going on Twitter right now. Because I come on to share mindfulness and kindness and do charity work and promote the charity work, and also to learn from other investors like yourself, Henry. Yeah. So that's what I've come on here for. I've not come to talk about, baking a cake. I can see that on Facebook. I love people sharing stuff about their holidays, because there's some places I haven't been and I want to know about that. But I'm not on about, here's a picture of my new, 50, 100 grand car. I'm not interested in that. I'm here to learn more about the world, history, and investing.
From your Twitter feed. I mean, you share some really interesting thought pieces. You share a lot of interesting accounts that are talking about tech or biotech or AI, different areas of the world, different areas of business and technology and society that I know very little about, that I can then go and explore. That's one of the reasons I like your feed so much, in addition to the charity stuff, which I think is fantastic. I forget how much you raised last year. Nearly 20,000, wasn't it?
24.5K we raised.
£24,500, and that's basically from just promoting this charity. I think that is fantastic. And Wheelie's now started with the
backup trust is the one for this year. Yeah.
You know, the good that does, it is entirely selfless. You and Wheelie do nothing other than help other people by promoting that. That has got to be a good thing for the world. I want more of that on Twitter, and I want less of, you know, conservatives and Nazis, or left-wing or all snowflakes, or whatever. You know, let's have a little bit less of that and a little bit more of the good stuff, please. The learning and the charity and the kindness. That's one of the reasons I like your feed so much.
Thank you. I mean, the important thing for me, Henry, is that we have one. I mean, this goes back to my friend. I miss him dearly, you know, and I wish, you know, he was still on Twitter and across social media. We want to get one hit at this. You know, we get one life. It's not a rehearsal. Make the bloody most of it. Yes. And I'm going to go and see Phil Oakley next month. But for me, things like that hit me hard when, because of other people's interactions and other people's vitriol and other people's anger and vileness, he's decided, I'm out of it. I'm gone. Done.
Yeah. And
don't need all
travesty.
of this. You know, absolute travesty. And that angers me. I don't do anger. I don't do hate. But it really gets me in a place that I don't need to be. So I'm doing my best to support him and others that come onto Twitter and come off Twitter, you know, without talking about it that much, because it's not a good place to be when it's horrible. It's a lovely place to be when everyone's doing and giving and sharing and showing kindness, you know. And on top of this, you know, Willie's not here. He's puts on a bash a year, which they all go to, yeah, and they all love, and we all connect, and we all find out, and we share. We put faces to names. Yeah. So that to me is about the goodness that can come out of social media.
I do go to those, and they are fantastic.
You know what I mean? That's really the goodness fantastic. That comes out of us being on social media, and really come up with the idea of putting our own little personal bash on. You know, I put an event on last year, and we raised money via the bash. I'm going to do another one this year, and we'll raise money again. There's lots of good to come out of social media, and I think people just need to think before they tweet something and get angry and dismissive of somebody purely because someone's not saying quite what they want about a topic, or dare I say, I'm being not bullish enough about a stock that you're in. Yeah, come on. There's more to life than one stock.
As my philosophy teacher used to say, engage brain before mouth.
Absolutely. Now, Henry, we've been running for an hour and odd now, and I'm always conscious that I leave these things too long. I'm going to ask you if you've got one stock, that you've been looking at, researching, thinking about, that you don't currently own, that you would share with our listeners in the sense of they can go away, you can continue your research, and just give another overview of it, without going into big details about it, that you think is worthwhile investigating, that regardless of recession maybe, just share.
So one I am looking at, I don't invest, I've been looking at it for well over a year now, still don't hold it, is Rainbow Rare Earths. The ticker is RBW.
Okay.
As the name suggests, it extracts, or it is looking to extract, rare earths from around...
From the rainbow.
From the rainbow, yeah, exactly. Well,
I couldn't resist, I'm sorry, carry on.
It's got minuscule revenues. It's non-profit making. But the thing that put me onto it actually was Claudio H. Fox, who you interviewed, I think, the last one of these or the time before.
Yeah, time before, yeah.
Who is huge on his mining stocks. I have held a number. I hold Rio, and I've got a couple of other gold miners and odds and ends. But I don't hold any industrial metal extractors. Now, the reason I was interested in this company is because it extracts a number of resources that are essential in emerging technologies. You know, one of the things it's huge on is, I think they're called permanent magnets. So very, very high strength materials that do not lose their magnetic properties over time, that are essential for a whole range of industrial applications. And they're really, really hard to manufacture. They're very expensive, very difficult to produce. There aren't many of them around, and they're essential to a whole range of applications. So that's a company that I'm looking at. I'm waiting to get some more positive news from it. It's not really in the space that I like. As I mentioned, as I think interest rates are going up and markets are coming down, I think this has got more downside risk right now than upside. But it's an area that I'm interested in and I'm looking at.
That's a very interesting one. It's not a stock I've looked at before, Henry. So I will go and have a look at it off this podcast and have a look at that. As you say, rare earths, minerals and elements and metals and so on and so forth are going to be of vital importance going forward. And we were tweeting before this, talking about energy transition, and all of the minerals, rare earths, etc., metals are going to be of vital importance regarding that. And without it, we ain't going to make the progress we want. We're not going to get these cars off the road, Henry.
No, we won't.
So yeah, good call. Definitely worth having a look at. I'm going to talk about one that we know both very, very well because it started in Leicestershire and branched out into Nottingham and Derbyshire over the years, and it's done substantially well. Family-owned business as well. One Henry, probably in your new flat house that you've bought recently, you've probably used without even knowing. Dunelm.
Oh,
you know that one?
Yes, we've got one round the corner. Fantastic.
So they've branched out down. Yeah, it's become a national company now, mate. But it started off on a market stall in Leicester, mate. That's where they started.
They are wonderful, great business.
Ticker symbol DNLM. And the reason I'm raising this is that only recently they came out with their latest trading update, and the share price popped again. So the UK homewares leader. And they reported a 69% jump, Henry, in third quarter sales to 399 million, which was 50 million ahead of their previous estimates that the broker had. And I'm sure that you didn't spend another 15 million pound on the plush, flat that you've got.
Verity's working on that one.
I'm sure she is. But yeah, so they're ahead. So it looks like it's looking likely that its full year pre-tax profits is going to be ahead even further, despite highly uncertain economic outlook. So I think people should give them a look. The share price have done extremely well so far, but the third quarter sales are superbly impressive, and they seem to be able to keep things at a reasonable price within. And we talked about inflation and prices going up, but because their cost bracket regarding the stuff that they sell or the homewares they buy are reasonable already. They're not at the top end. They're not Harrods. People are still using them to buy products. So that's one I think people should have a look at. It's not a tip. It's not a recommendation because we don't do that on here. But yeah, so the share prices are at about 10, 11 pounds or thereabouts at the last look. And the broker has got a price target towards 17.5 quid. So that's an interesting one I wanted to share with people to have a look. I don't own it. It's not one I've researched in the sense of looking to buy it going forward, but that's just one we will share with people. Any thoughts on Dunelm?
Very, very interesting company. I think it's exceedingly well run. Like you say, family run business. I know it well I'm from Nottingham originally. Just generally a very good business. The store experience is fantastic. They tend to hire very personable customer reps as well, people on the tills and walking around the stalls. And to me, that's the sign of an excellent retailer. A lot of retailers, frankly, don't get the quality of staff that I like to see. The retail experience for me as a customer is generally dire. Maybe it's just me. Maybe they see me walking and
they see you, yeah, absolutely. Yeah, they'll speak to Verity, they won't speak to you.
Exactly,
I understand what they're saying. Yeah.
But with Dunelm, I always find they come over, they'll ask if you need something, and they'll give you recommendations about the products that they've got. They know their product range very well. And I appreciate that. Whereas with some businesses, they'll just try and sell you the most expensive thing, or they will literally just pick one up off the shelf and go, there you go, so that's what you asked for. Oh, what use is that to me? I want a bit of advice. That's why I'm in here.
No, that's really good. Now, I'm going to close this podcast here, Henry. I want to thank you ever so much for coming on here at very, very short notice, may I add.
My pleasure.
And sharing and extolling upon us your experience. And, we've had this conversation off record. I hold you in high regard, and that's the reason why we're friends on and off Twitter. And I don't say that about many people. So, you know, it's really good that you came on, you shared what you shared. It's beautiful that you are where you are in the world right now, happily married with a lovely lady, punching above your weight. I'll add that as well.
Yeah, definitely
on here.
Above my weight.
But, you know, love Verity to bits. And just want to wish you all the very, very best with everything and going forward and your new job. So everyone, thank you again for your feedback for the last podcast. And I hope you enjoy this particular Twin Peaks investing. Unfortunately, we had to do it without Pete for extenuating circumstances. He will be back. He's going to have his op, I think, Thursday of this week. We recorded this on Monday, so it's not about the markets and as much as it would be because the markets have been closed since Thursday. We hope you enjoy it. Please give your feedback. Please share what your thoughts are regarding what Henry shared. Please follow Henry at HTViola on Twitter and let us know what you thought of this podcast. And enjoy the rest of your week and the rest of the year. And we'll look forward to seeing you in 2 weeks' time. Until then, take care and God bless. Bye-bye. See you, Henry. Speak soon, mate.
Bon chance.
This Twin Peaks Investing podcast is brought to you in association with SharePad from Sharescope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.